Welcome everyone. Good afternoon. I'm glad you're here. So if you've watched my previous live trainings, you understand why I believe that freedom-based Medicare coverage, which is original Medicare with a Medicare Supplement plan, rather than network-based managed care, is the best long-term choice for most retirees. So today we're diving into that a little further, and I'm going to talk about something that I get asked all the time, and that's how do I choose the right Medicare Supplement plan? Not just which letter, but which company should I get my plan from? So if you're turning 65 soon, if you're leaving your employer group plan, or just reviewing your current coverage, type supplement in the comments. If we haven't met yet, I'm Casey Albin. I'm the Senior Medicare Advisor here at the Albin Insurance Group in Margate, Florida, and I help professionals, business owners, and retirees all throughout the country think through Medicare decisions strategically and choose a coverage strategy that fits their life for the long term based on their lifestyle, their goals, and their budget. I'm also a pilot. I fly for fun, and many of my clients refer to me as their Medicare co-pilot. It's your journey. I'm just here in the right seat next to you to help you map everything out and then avoid turbulence along the way. Choosing a Medicare supplement is not just about today. It's about how it protects you 5, 10, even 15 years from now when you're much more likely to need it. So here's what we're going to cover today. We're going to talk about when you can enroll in a Medigap or Medicare Supplement plan without underwriting. Yes, there is a period of time where every insurance company has to sell you a Medigap plan, no questions asked, no matter what kind of pre-existing conditions you have. And we're going to talk about why the timing matters. We're going to talk about the 10 standard Medicare Supplement plans. There's 10 standardized plans, but there's really 3 that matter in 2026. We'll get into how you can choose the right plan for your situation, how to choose the right company. That's important too. So if you've ever felt overwhelmed when you're comparing plans, type me in the comments. And let's get into it. Go ahead and grab your coffee or your favorite beverage and let's walk through it. Timing matters more than most people realize when it comes to getting Medicare Supplement coverage. Your best window of time to enroll is during your initial enrollment period when you're turning 65, or during a special enrollment period when you're leaving employer coverage after age 65. The reason for that is because you're going to be within your 6-month window of activating your Part B coverage, and you can also do it before your Part B starts, by the way, and take advantage of that 6-month window, because during this time you generally cannot be denied coverage. It doesn't matter what kind of pre-existing conditions you've had. And that's huge. After that, what happens? Well, in most states, underwriting applies. That means health questions. It means if you can't answer no to the health questions, you could face a possible denial of coverage. That's right, you could be uninsurable. And that's why strategy at the beginning really, really matters. If you didn't know underwriting could apply later, type timing in the comments. Unlike Medicare Advantage plans, which are individual plans approved by Medicare and with rules set by each individual plan, there are 10 standardized Medigap plans. But in 2026, realistically, there's only 3 plans that make sense for most people. And when I say that they're standardized, what that means is the plan is going to have the same features and benefits regardless of which company you get it from. But the companies are not all the same, and we're going to get into that. So let's talk about the plans and how they differ, because the strategy I like to teach is first, let's figure out the right plan, and then let's go and look and see which company is going to be the best company to get it from. Plan G is the most popular plan for good reason. It's the most comprehensive plan. I like to think of G as G for gold, because it really is the gold standard for Medicare Supplement plans. Plan G covers almost all of the gaps in Medicare under Parts A and B. It's the closest thing you're going to find to complete coverage on the market today. So with Plan G, your only out-of-pocket cost is the annual Part B deductible. You pay your fixed monthly premium, which gives you predictable costs, and then you know that your only out-of-pocket cost under Parts A and B is going to be the annual deductible, $283 this year. But like all Medicare Supplement plans, you can see any doctor anywhere in the country who accepts Medicare. That means no referrals, that means no networks, that means predictable costs. And it also means permanent coverage, because Plan G, like all Medicare Supplement plans, is guaranteed renewable. That means as long as you pay your premiums, It can't be canceled. Your benefits can't be changed. It's permanent coverage. And if you travel out of state or you move, your Plan G is going to travel or move right along with you. It's the ultimate inconvenience. And that's why it's the most comprehensive and most widely chosen. That's why it's the most comprehensive and the most widely chosen. It's going to provide the highest level of convenience and protection against out-of-pocket costs. And as we all know, significant out-of-pocket medical costs can really be devastating to a retirement plan if you haven't planned for them. And this can give you that deal of protection. Essentially, you're going to pay the Part B deductible and you're never going to get another bill. Plan N is in Nancy is the second most popular plan. And this is popular for good reason. It provides comprehensive coverage on the Part A side. It's going to cover the hospitalization deductible. It's going to cover the Part A coinsurance for extended hospital stays. It's going to cover the skilled nursing coinsurance. Where it differs is on the Part B side. You're going to have the annual deductible, $283. After you cover that, instead of covering 100% of the 20% coinsurance, it's going to cover most of it, but it's going to leave you with some small copays. $20 if you go to the doctor, $50 if you go to the emergency room and you aren't admitted to the hospital. The other area that Plan N doesn't cover, and this is one that scares a lot of people, agents too, by the way, and it shouldn't. These are what are known as Part B excess charges. In order for a provider to accept Medicare, they have to sign a contract with Medicare. There's two types, participating and non-participating. A participating provider agrees to accept Medicare's approved rate for that service or procedure as payment in full. A non-participating provider accepts Medicare, but they don't accept the approved rate as payment in full. And their contract allows them to charge what's called an excess charge. That means that they can legally charge an additional 15% above Medicare's approved rate for that service or procedure. Excess charges are limited to Part B. They don't occur in emergency situations, and they have to be disclosed up front. And by the way, they're very, very rare. According to Medicare's own data, less than 2% of providers who have Medicare contracts are non-participating. And they have to tell you about it up front. The rule with excess charges is know before you go. Look the provider up before you go. If they charge excess, go to a different provider. Now, some states, like Connecticut, for example, they don't even allow excess charges. So it's a non-issue in those states. Although if you travel to another state, maybe you're in Connecticut and you travel out of state to get care, a provider out of state may be allowed to charge an excess charge even if you got your plan in Connecticut. But again, it's very, very rare nationwide, and this shouldn't scare you if you're looking at Plan N. Plan N can be a great plan for people who want comprehensive coverage for hospitalization and fairly comprehensive coverage on the Part B side, but they don't mind sharing in some of the costs in exchange for a lower premium. And the premium difference with Plan N in some states can be anywhere between $40 to $70 a month less than a comparable Plan G. Doesn't happen in all states, but in most states, that's the difference. And in that scenario, a Plan N might be a good choice. The third plan that's popular in 2026 is Plan HDG. That stands for High Deductible G. And that is simply Plan G with a deductible. The deductible is $2,950. And then once you meet the deductible, you're 100% covered, just like regular Plan G, but with a premium savings of typically 60 to 70% when compared to the standard Plan G. The way that it works, Medicare is going to pay their share of the covered expenses, and you simply pay your share of the covered expenses until you reach the deductible. So you would pay the $283 Part B deductible. You would pay your 20% coinsurance. If you were hospitalized, you'd have the $1,736 hospitalization deductible. All of those would add up to $2,950. Once you reach $2,950, you're covered 100%, just like you had Plan G. That's an annual deductible, so once it's met, it's met. It does reset every year. This can be a strong fit for someone, maybe a healthy individual, building a long-term strategy. Maybe you've got an HSA and you've accumulated money in your HSA that you didn't use while you were working. Well, you can't contribute to that once you're on Medicare, but you can still use the HSA funds for any type of qualified medical expense, and that pairs nicely with Plan HDG. It's a great plan for someone who wants the comprehensive coverage, the freedom that comes with a Medicare Supplement plan, but wants to maintain the lowest possible monthly premiums and is comfortable having a small deductible, which functions really as a true maximum out of pocket under Parts A and B. And by the way, even with an HDG plan, your maximum out of pocket at $29.50 is still going to be significantly less than the maximum out of pocket that you would face on one of those network-based managed care plans. And you'll have the same freedom as all Medicare Supplement plans, which means you can choose your doctors, you can choose your providers. You won't have to wait to see if the insurance company is going to approve a test or procedure. I recently was talking with someone. They had a Medicare Advantage HMO plan, and they wanted to switch because with an HMO you can't go out of network, and referrals are required. And their primary care doctor was only willing to provide referrals to specialists that not only were within the plan's network, but were within their provider group. And this person went and was getting a procedure done, and they were in the office to do the procedure, and it had to be canceled because the primary care doctor would not approve the referral because they didn't want them to go outside of their practice. That kind of stuff can happen on network-based plans sometimes. It cannot happen with original Medicare, because as long as the provider accepts Medicare, you can go and have your procedure done. It's a great deal of freedom. But any one of these plans can be a good choice. The one that's right for you is the one that fits your goals and fits your strategy. Plan HDG doesn't always work if you're in a situation where you're going to reach the deductible most years, or you don't like the idea of tracking claims. But any one of these plans can be a good fit for your Medicare strategy. It all depends on you and exactly how it fits. So if you're surprised that it's just 3 plans that make sense this year, type 3 in the comments. Now, we talked about how the plans are all standardized. So I know what you're thinking right now. Like, oh, this is great. I'll figure out which plan I want, and then I'm just going to go online, and I'm going to self-enroll and get the cheapest possible plan for that particular type, right? Well, that isn't necessarily the right approach. Choosing the right company now matters more than ever. And that is where I see so many smart people make what I think is the right choice to get a freedom-based Medicare Supplement plan, but then they end up choosing it with the wrong company. Yes, the benefits are standardized, but premium pricing and companies are not. Medical inflation is rising. One thing we can guarantee is that premiums are going to increase. Healthcare utilization has increased since COVID for a number of reasons. Medical costs continue to rise. So how a company manages their premiums matter. Some companies have what we call very low teaser pricing, and they want to get you in at a lower premium, so they may price based on that. And then down the road, they're going to start to raise premiums significantly. Well, what happens then? Well, you're outside of your 6 months of activating Medicare Part B. If you've had any kind of a claim, you may now be uninsurable. You may be stuck in that plan and dealing with significant double-digit premium increases every year. So how a company manages premiums matters. And that's why working with an independent agent that has access to market data and knows the ins and outs of the companies really matter. For us, being an independent agent, we have the ability to work with any carrier, but we get to choose the carriers that we want to work with. And for us, we focus on carriers who prioritize stable premiums over time versus just trying to have the lowest price today. And the reason that's important is you typically keep your Medigap plan for 5, 10, 15 years. So the first year premium is not nearly as important as that company's history of premium stability. And today, more than ever, with medical costs increasing, all companies are going to have premium increases. So you really want to make sure you're with a company that manages their business based on stability, because that's going to give you the most protection against steep premium increases over time. And does that mean that a company that focuses on stability isn't going to have a year where they have a significant premium increase? No. But what it does mean is, although there may be some years where they have an adverse change, or where the state makes them take an adverse premium increase, they're going to be more likely to return to their historical pattern of managing for stability, as opposed to companies that price differently. The other thing that we look at is we want to make sure the company has at least 5 years of writing Medicare Supplements, because we want to know that they're going to stay in business. There's a lot of big name companies that have gotten into the Medicare Supplement business, and companies sometimes drop out of the Medicare Supplement business within that 5-year period because they realize maybe they can't be successful. So we want companies that have a long-term track record. We want companies that maintain open books of business. That kind of ties into that teaser pricing too. Some companies use closed books of business. What does that mean? Well, that means that they open up a plan. Sometimes they have multiple companies under a big name. They open up a plan for a few years. They price it essentially below cost, and then they start raising premiums. They close the book of business. They stop taking new beneficiaries, and maybe they open up under another book of business. Well, what happens when you're on that closed book of business? The population of people that are on that plan, they're outside of their 6 months of activating Part B. It's harder to move. They're getting older. They're having more claims. But guess what's not happening? There is no new blood coming into the book to offset that, which means now that you have a shrinking population that has more and more claims. Well, guess what? That's got to be shared amongst the people on that book of business. So that means that the claims activity on that book of business is higher. That drives higher premium increases. And the last thing we look at is we want companies that have good customer service. And for us, a big factor is we want to make sure that their customer service is in-house with their own employees, preferably U.S.-based employees. We try to avoid companies that send their customer service offshore or use a third party because it just doesn't provide the level of service that we want our clients to have. So open book versus closed book matters. Premium stability matters. Customer service matters. The other thing that matters too is the financial ratings. You want to make sure that they're at least A or A minus with AM best. You don't want anything, even if they're a B plus or a B. Those are companies that just aren't as solid financially. You want to make sure they have a strong track record. And as independent agents, we get to focus on relationships with the carriers who focus on the things that are important to us. That's premium stability, not teaser rates, good customer service, solid financial ratings, and a strong track record. So if long-term premium stability matters to you, type stable in the comments. So I know you're thinking of all of this. It's a lot to think about, and you're probably wondering, well, how do I figure all of this out? Well, and that's where having a trusted guide matters. Yes, you can enroll yourself through a self-enrollment portal. You can call a 1-800 number. But if you do that, here's what you're going to miss out on. You're not going to have someone to sit down and help you map out your long-term strategy. You're not going to have access to a carrier stability and rate analysis or premium trend insights. You won't have underwriting guidance. And you definitely won't have personal support from someone that you know and someone that knows you. And here's the important part. And a lot of people are under the misconception that it costs more to work with a Medicare advisor like me or like us, and that's just not true. Your premiums are going to be the same regardless of who you work with. You do not pay more to work with us. Doesn't mean we work for free. We get paid by the insurance companies that we represent, but the premium is the same whether you enroll yourself or whether you work with us. But we work for you, and we're there to guide you through it. And if you work with me or with someone on my team, we're going to be with you throughout your Medicare journey. Not just at enrollment, but a year down the road, 5 years, 10 years down the road, helping guide you through it, being there to answer your questions, and helping you if you run into any issues of concern. So having someone who sees what you can't see sounds helpful, type guide in the comments. So if you're within your enrollment window, whether that's at 65 or coming off of a group plan, maybe after 65, or if you're already on Medicare and you're just reviewing your options, my team and I will be happy to assist you. You can go to medicarequotes.com/Facebook and you can book a quick appointment. You can call the office at 954-970-4760. Liz or Christine will get you on the schedule, or just comment guide in the comments and I'll reach out personally. No pressure, no hard selling, no obligation, just clarity and getting all your questions answered. So here's some common questions that I hear as I'm talking to people. The first one is Plan G always better than Plan N? And no, it really depends on usage patterns. It depends on how you use healthcare. It depends on your budget. But it also depends on the premium spread between Plan N and Plan G. Because if it's only $10 or $20 premiums spread between Plan N and Plan G, I'm going to recommend going with Plan G because you go to the doctor a couple times, those $20 copays could eat up that savings. Can I switch Medigap companies later? Possibly, but with the exception of some states that have more flexible guaranteed issue rules, underwriting is most likely going to apply. What does that mean? That means if you answer yes to one of the company's health questions, you're essentially going to be uninsurable and not able to switch. Why are some premiums so much cheaper for the same plan with different companies? That's a great question, and this is one that I see trick smart people all the time. Some companies use teaser pricing or closed book strategies, and you don't always have access to see what the premium increases are in the subsequent years. And this is where I see so many smart people end up getting burned. They sign up for a plan with a company that they like, only to find out that it's gone up 20, 25% the next couple of years, and now that $20, $30 premium savings they thought they were getting on their Plan G, now it's becoming unsustainable. And if they've had any kind of a claim, it might be difficult to switch. Is High Deductible G risky? Not necessarily. It can be a great plan, but it has to fit your overall strategy. I wouldn't recommend getting High Deductible Plan G just because you're looking at the lowest possible premium. You want to make sure that it fits your strategy. Are you comfortable with a deductible? A great example is my mom. Her retirement income is Social Security and a small retirement plan. For my mom, the High Deductible G, $3,000 out of pocket, that will be kind of hard for her. But a stable monthly premium, the Part B deductible, and not having any significant out-of-pocket costs for her, being on a fixed income that was less than when she was working and income that needs to last her for the rest of her life, a Plan G made the most sense for her in that case, and it does for a lot of folks in that situation. But the High Deductible plan can be a great plan if you're comfortable with the deductible and you're prepared for it, and you understand the overall package. Do I pay extra to use an agent? I mentioned this before, but no, the premium is exactly the same. It doesn't cost you anything extra to take advantage of our service. And if you work with us, we're going to sit down and we're going to go through your overall Medicare strategy, and we're going to recommend the plan that best fits that overall strategy, your comfort level, your risk level, and then we're going to find the best company to get that from. Choosing the right Medicare supplement isn't just picking a letter. It's choosing timing, structure, and the carrier wisely. And that's where having a trusted guide can really help. Start with the strategy, choose the plan, and then choose the advisor to help you do that. My team and I would be honored to walk you through that. Again, you can go to MedicareQuotes.com/Facebook to book an appointment. You can call the office at 954-970-4760, or you can simply type guide in the comments and I'll reach out to you directly. Thanks for being here. I will see you next Wednesday at 3 p.m. for our next Medicare Live. Have a great week, everybody.